Ever wonder what Cathie Wood has been saying lately? Among the many well-known figures in the financial sector whose opinions are genuinely regarded by most people is renowned investor Cathie Wood. Continue to watch and listen to see what she has to say this time. Bulls and bears in the Tesla market typically take the advice of experts into consideration and either stick to their guns or go all in. Of course, even experts disagree on a number of equities, including Tesla's. Nevertheless, despite the company's many problems, some people are still optimistic about it, while others are incredibly negative. You can watch today's video to hear from Cathie Wood. While the price of Tesla stock appears to have recovered, it is still bouncing between $800 and $900. Currently, the stock is trading in the $600 to $700 area. The global disaster that recently rocked the world, the COVID-19 pandemic, can be blamed for the recent swings in stock values, including Tesla's. This pandemic had a significant impact on the supply chain of Tesla and other businesses. On the other side, the Russia-Ukraine war had a significant impact on the economy when China imposed a lockout due to its zero COVID policy, while other investors were concerned that the United States may have a recession the next year. Cathie Wood, the creator of our investment management division, believes that one hit has already occurred and that it may end next year. We actually think we'll be coming out of it in 2024, while many economists and strategists have been resisting the notion that we are in a recession and anticipate that the U.S. may enter one next year, stated Wood, Chief Executive Officer and Chief Investment Officer of ARK, during the firm's monthly meeting a few days ago in late June. The United States is already in a recession, Cathie Wood cautioned. In an interview with CNBC, our self-confessed CEO, Cathie Wood, acknowledged that she had misjudged the level of inflation and went on to suggest that the U.S. economy is probably now in a recession. Wood attributed the increased price pressures beyond her initial projections to supply chain interruptions and geopolitical concerns, such as the conflict in Ukraine. She added that a recession had already started, mostly due to poorly managed inventory. Although she acknowledged that the United States is currently experiencing a sizable inventory slump, she insisted that it will not resemble the systemic recession and financial crisis of 2008 to 2009. It will be more of a garden variety, she clarified. According to Wood, problems with the supply chain caused big merchants to mishandle their inventory, which resulted in an abundance of some completed goods, such as furniture, which was in high demand during the epidemic. She claimed that issues still plague even the world's most well-run businesses. She continued by saying that, in her 45-year experience, she has never seen a larger surge in inventory than she has in the last year. According to a 2008 analysis by the Federal Reserve Bank of San Francisco, the average length of a U.S. recession from the mid-1940s to 2007 was 10 months, with the shortest recession during that period being only 6 months. Given that growth companies have higher growth rates than the rest of the market, which is typically more impacted by the cycle, Wood said that innovation is recession-resistant and pointed to the recent return to growth stocks as evidence of this trend. Investors will be closely monitoring the statistics as the Federal Reserve attempts to control skyrocketing inflation through tighter monetary policy. This will help them determine the likelihood of rate hikes by the Fed. Although the July CPI statistics may show a flat, slightly upward, or slightly downward trend, Wood anticipates a reduction in inflation in the upcoming months. Another indication of the inventory glut that businesses are currently attempting to address is the recent decline in the e-commerce-focused Adobe Digital Price Index, notes Wood. According to her, innovation, especially when it's technologically enabled, defies inflation, but a healthy kind of deflation. The good news, according to Wood, is that the U.S. is starting to receive evidence confirming that the economy is in a recession, but the bad news is that the Fed has become extraordinarily active and hawkish. She thinks that since China and Europe have also been experiencing a recession, it can now be referred to as a global recession. How do you feel about the current price of Tesla stock? Tell us in the space provided for comments below. According to Wood, I think the fears here are going to shift from rising interest rates and higher inflation, potentially to recession, especially, and you've heard me on this before, because we see inventories piling up throughout the ecosystem. Wood claims that throughout the past year, the share of innovative stocks in the public equity markets has decreased from 50% to 75%. Wood went on to say that there are a growing number of signs that prices are beginning to decline, and she believes that the inflation that has everyone concerned is now a false perspective on the state of affairs. She underlined their conviction that the greater risk is deflation. According to Wood, one deflationary factor is fiscal policy. Federal outlays are growing at a very slow rate. Although the current era and the 1970s have been compared by economists, she pointed out that throughout that time, federal spending growth never decreased. We were wrong on one thing, and that was inflation being as sustained as it has been, Wood stated. It's unbelievable that the supply chain is taking longer than. Naturally, we were unable to witness Russia's invasion of Ukraine over those 2 years. Although it has been a greater issue, inflation has prepared us for deflation. Nonetheless, they contend that while deflation itself is not a negative thing, the Fed's handling of it is. She stated that the United States would undoubtedly see a lot of deflation in the future because of advancements in technology, but for the time being, they are experiencing negative deflation, which the country's economy will need to overcome in order to have a better understanding of. When there is a broad downturn in economic activity, a recession in economics is defined as a contraction of the business cycle. This is a brief period of economic downturn marked by a sharp reduction in commerce and industrial activity, as seen by a decline in GDP over the course of 2 quarters. Recessions typically result from a sharp decline in consumer spending. The rate of price growth during a specified time period is known as inflation. Usually, inflation is measured broadly, as in the case of a country's cost of living increase or general price increase. Conversely, when the inflation rate drops below 0%, there is a decline in the overall level of prices for goods and services, which is known as deflation. Over time, inflation lowers the value of money, but abrupt deflation raises it. While the majority of economists feel that the United States has not yet experienced a true recession, ARK Invest Cathie Wood doesn't think so. Wood, who is well known for placing large wagers on innovative technology companies, stated that the U.S. economy is already experiencing a recession, even though it hasn't been formally announced. It's critical to keep in mind that in order to comprehend Wood's theory, a recession is technically defined as 2 quarters in a row in which the gross domestic product, GDP, has not increased. By that standard, it is feasible to determine that, in the wake of the first quarter's 1.4% GDP decline, the U.S. economy was already in a recession when August GDP data was made public. Professor Jeremy Siegel of the Wharton School of Business concurs with Wood that the United States is currently experiencing a recession. Siegel stated to CNBC that the first half of the year's economy most certainly shrank. He went on, "I think we're actually in a mild recession," citing signs that the economy is slowing down into the 3rd quarter. Specifically, he mentioned data indicating a decrease in the U.S. money supply, implying we are beginning to manage inflation. What impact would a recession have on Tesla, the top EV manufacturer? Has been making good financial progress over the past 2 years thanks to the booming demand for electric cars, the mass market model WN3's production ramp, and the opening of additional production facilities. Nevertheless, Tesla does not appear to be significantly harmed by a recession. Economic downturns usually result in a sharp decline in sales for automakers, but Tesla's business is predicted to do far better. The adoption of EVs is still in its very early phases, and demand for Tesla has typically outpaced supply. Tesla had previously stated that it might reach 60 growth this year and has projected for above 50 delivery growth over a multi-year period. This suggests that demand growth should continue even in the case of a slump. Furthermore, economic data suggests